Hello and welcome back to another episode of Trader's Zone with me, Simon Davis, also known as Zone Trader. Today we're going to be looking at smart money concepts to help you in your trading career. Okay, so the reason why price came from this area high all the way down to here is because it wanted to run stops below here. So imagine loads of stops below these lows. Price came down from up here to run stops. The energy that brought it down was the order block. So this is a bearish order block. We all know what an order block is by now. Most of us do anyway. If you're new, you won't. There's plenty of order block videos online and plenty of order block videos that I've created as well in the past. So you got the last up candle before the fast down moves your order block. But when you're on the charts, you're looking for the whole pattern, because one candle isn't an order block on its own. You can't identify an order block without other candles, so it's the whole set of candles. You got the last up candle before the fast down move. That's what you're looking for, that pattern. When price returns to the order block, drop down to lower time frame to look for a smaller either order block, breaker or turtle soup within that area. If it's a very strong order block, and if it's an order block in general, price shouldn't go higher than the order, so you put your stop loss above the order block if you're just trading on the hourly time frame. If you're trading an order block on the lower time frames, put your order block above that time frame, the order block of the time frame that you're on. And obviously targets are here and this low, which we talked about, which got swept. So it's a turtle soup. That's a nice name for it. But what it's doing is it's running the stops, clearing the path for you to know that you can then look for buys once price comes back into the range, which it does so here. And we look for buys with a bullish order block. The reason why we're not choosing this one, and this one, and we're choosing this one because it's a fast move away and a return, and these are all getting engulfed by this candle, so it's one order within that area. You can see there's no close as well, which makes the order block even stronger, and strong order blocks never get broken, so you stops below the order if you're getting in on the hour. If you're getting on lower time frames, stops below the order that you're getting in on, the time frame you're getting in on. So there's a bearish order block and a bullish order block. This here I'd have marked off as a potential order block, potential RTO, return to origin, return to order. So that's smart money order blocks and a bit of lingo in what happened. The reason why price came from down here to up here was to take out these highs. So equal highs, ICT calls Candyland. Price rallied through equals highs. So if you got in on this order block, it's like 52 pips to equal highs. Price is still going. So I'll clear all this. Next move is breaker. So you got a low and a lower low, which I'll mark off with these boxes here. And then the middle candle in between the lows, the last up candle, because smart money is selling in up candles and buying in down candles. that it's reversed. So with an order block, they are selling within this last up candle. They are selling, drives price down, then the price comes back up, and then they are selling again in this area. So with the breaker, they are selling within the breaker, so it drives price down to run the stops. Once the broker is broken, it's an order block until it's broken. So it's an order block until it's broken. So if price is down here, then it's an order block. Once it's broken, the breaker, it becomes a breaker. Then when price returns, so they're in a winning position because they sold here. But when price drives back up, they're actually in a losing position from this candle, from this breaker. They're actually in a losing position here. Then when price comes back down to it, they're going to take off their losing position at break even and then load up the buys because they've cleared the path. So they load up the buys within this area here, and that's what makes price rally higher. So these are the 3 moves you need in trading, along with directional bias, which you find on the daily. Always go from higher time frame to lower time frame. So the 3 moves are the order block, the breaker, and the turtle soup. The turtle soup is you got a high, and then price runs through it and comes back down into it. So it runs through it here, comes back down into it here. It's completed turtle soup. It's not a turtle soup until price comes back down into the range that it created here. So I like to see it as a box, a trap box. So you've got all the bulls running in, they can't get back out to allow the bears to run out in a turtle soup. They're reaching for lows below here, price ultimately goes down there. This isn't a breaker because there's no higher high on this candle. You got high, higher high. Breaker. Doesn't close below, so it's not strongest, but it's still a breaker. Still went below. Price comes back up. Run stops and then run stops and then goes to liquidity, aims for liquidity. So price ran stops here and then aim for liquidity. So price ran stops here, just to show that there's all the stops there that's been ran, and then liquidity gets ran here. So price always runs the stops, goes to liquidity, runs the stops, goes to liquidity. So it's big accumulation across here. Price ran the stops over here and then reaches for liquidity above here. So is this a run on stops, and are we going to be reaching for liquidity up here off of an order block here? It's a potential setup on Euro USD. Anyway, if you want more in-depth coaching in price action, smart money concepts, and join our live calls each and every week, then reach out to us on Instagram and ask us how you can join our live calls each and every week, which is a one-time fee. No monthly fees. We'll never charge you a monthly fee. It's a one-time fee. Once you're in, you're in, and we always keep you updated with the latest and greatest in price action. Until next time, stay patient, stay disciplined, always follow your rules, and manage your risk.